Hello, everyone. Thanks for joining us today, this Wednesday, and welcome to this educational presentation of an introduction to strategy number 9. I want to be introducing a brand new method that we have, and let me share with you a perfect example of how this method could have helped you this past half of the year. Let's look at this chart here. This is the S&P 500 on our PTS Primo charting platform. As you can see here, the market was going up. We all remember that from the summer of last year all the way until October, just about 3 or 4 months ago. And then as it was going up out of nowhere, this happened, okay? Now, it went down so poorly, it was reported in Yahoo Finance that U.S. stocks suffered the worst year since the 2008 financial crisis, okay? After the sugar high of 2016 and 17, that saw the S&P 500 gain 9.5% and 19.4% respectively, Wall Streeters tasted more bitter than sweet in 2018 amid historic volatility. The Dow Jones Industrial Average shed 5.6% during the roller coaster year, which saw it test the 27,000 point threshold at 26,961.81 on October 3rd, before it plunged over 3,600 points at year end. So basically, the market fell out of bed, as we all experience, and when the market was going up, everyone's a genius. Everyone makes money. Every system, any method you can think can do really well. So people are always excited when markets go up. It's when the environment changes, as it has recently with volatility and with a downward bias, that things are more difficult. Well, I want to introduce a great new method that can actually trade both sides of the market. When the market was going up, this particular method generated buy signals in the S&P 500, and while it was going down prior to the really large sell-off it had in December, it also generated sell signals. So we're going to share with you a great new opportunity. You can be one of the first people to actually trade our new method along with yours truly, because it isn't open to the public yet. It's still in the pre-launch phase, and we haven't made it available, and it's going to be happening very soon. You're going to be able to get all the rules. It's a very simple but very consistent method. You'll be able to trade it very soon. And on top of that, you'll be able to trade it on a new platform, the PTS Primo charting platform. This is the educational portal that teaches you how to trade in both up and down markets. So welcome to this presentation. My name is Steven Primo. I'm the president and founder of Specialist Trading. Just about 10 years ago, I teamed up with Pro Trader Strategies with one goal in mind, and that was simply to educate traders so that you could ultimately be responsible for your own actions. The majority of traders fail, upwards of 80%, because you're basically not responsible for making your own trading decisions. Most traders take their decisions from some chat room, from some trading guru, from some guy on a webinar even, and they're not really a part of the process. So here's the good news. Pro Trader Strategies and myself developed software. We developed strategies so that you could actually make your own decisions. You could actually be a part of the process. So that's what we do. We are an educational company, first and foremost, teaching traders how to trade. And you'll see how much attention we give to detail in teaching you in today's presentation. Now, before we begin today, I, as always, have to show you this. We are required by law to share with you our disclaimer. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using our strategy number 9 new method and a lot of the signals it generated. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And please remember that all examples are strictly for educational purposes only. Now, with that said, before we begin, as always, I'd also like to invite each and every one of you to follow us on Twitter. You may want to copy down our handle right there at SPCLSTTRADG. There's a lot of great free educational information, anywhere from little bits of financial wisdom to actual signals that our strategies have generated. You can go check it out today if you'd like, but feel free to follow us on Twitter. Okay, with that said, once again, just let me reiterate that we are different from other presentations you may have attended in the past, in that our only goal is simply to teach you. All right, I know you go to a lot of webinars and they come up with this great plan, and then at the end of the presentation, you have to attend a $10,000 or even $15,000 class. Trust me, I've heard it from a lot of our students who I wish would have seen us first before they spent and wasted a lot of money on different techniques and things that they really don't even understand, or a signal service that just blindly spits out buy and sell orders without you really understanding how they were generated. We don't believe in any of that at Specialist Trading and Pro Trader Strategies. As you can see here, my goal is not to force feed you signals. My goal is not to tell you what to buy and sell on a daily basis. Now, even though our strategies generate signals on a daily basis, we teach you all of the rules and give you all of the variables so that you can decide how you want to enter. You can decide how you want to exit. You can decide how you want to place your stop. And you can decide if you want to get out soon or carry the trade for weeks, months, even years if you like. It's entirely up to you. So even though our strategies generate high probability setups, it's up to you on how you trade it. And this is where we differ from most presenters, in that they basically have a systematic approach where everything is done for you. They tell you exactly where to enter, where to exit, where to place your stop. We don't believe in that. We want to give you the variables, a type of smorgasbord, so that you can pick and choose what you like. Because it's my belief that that's the only way you will become a consistent trader. Not by taking your cue from someone or something else, but by making your own decision. So as you can see here, my goal is to teach you how to trade with the specialist edge. The reason why I stress that so much is because when I was first trading some 42 years ago, I struggled tremendously. I focused on the same things that probably many of you are still focusing on, such as news, earnings reports, signals being generated by a system, systematic behavior, volume, support and resistance. And trust me, none of those things worked 42 years ago in terms of consistency, and I don't really think they're going to work now. So the main thing is to put yourself in the ball game, and that's what we do. Our goal is to teach you how to trade with the same edge that turned my trading around some 42 years ago. Hopefully, it will do the same for you. So this promises to be a great class, but once again, as always, if you're a little bit new to my presentations, I like to take questions, but at the very end of the presentation. So if you have a question, please wait till the end to ask. I promise I'll get to each and every one of them. I'll only ask the one question that is the most common and most popular, and that is this being recorded? Yes, it is. We will furnish everyone a link to the recording today. So if you have to leave early, if you're having technical issues, don't worry. You will all get a link to this recording. Okay, so we have a good class here today, a good amount of attendees. So once again, if you happen to join us late, please wait till the end to ask any questions. All right, so let's begin. We're going to be talking about strategy number 9. And as I said earlier, this is an entirely new strategy. In fact, we've really never done something like this before, because usually they're the strategies that I've been trading or I've known about for a long time. This is something that was really, I've been tracking for about a good 6 months now. And I felt, confident enough to really, publicize it and have other students and members trade it, because I've been tracking it. I've been paper trading it as well as trading it myself. And I feel confident that it's something I can teach. It's a proprietary pullback method. Now, if you're not familiar with a pullback method is, don't worry, I'll explain it and go into detail in just a few minutes. The beauty of strategy number 9 is that it can be applied to virtually any market, any time frame, in any direction. And you'll see that in just a few moments as I show a lot of examples in different markets and time frames. Now, one of the other really advantageous things about it is that you can apply options to it. I know a lot of traders don't like to short stock or different futures or different markets, or perhaps you don't have the account size to do that. That's okay. You can still take advantage by purchasing puts or some type of negative spread strategy. And this will work really well with strategy number 9. As with all of our methods, in fact, I've been doing this, as I said, for roughly about 6 months. We always want our students to learn the strategy in full, and the only way to do that is through paper trading. So we always require all of our students, regardless of your experience, if you've been trading 30 years or 30 minutes, it makes no difference. We want everyone to paper trade first, because that's how you become familiar with the process. Now, our edge here is consistency. Once again, consistency means that you will have some losses every once in a while, some losing trades. That's okay. I'll show you a few. The beauty of a consistent method is that it hits singles. It doesn't look for the home runs. And trust me, that's what's going to sustain you as a trader. You see, true success in trading is about longevity. It's not about having a method that can make a home run and make you hundreds of thousands of dollars one year and then give it all back the first few months of the next year. That's not a real valid method. What a valid method is a consistent method, a 2-step forward, 1 step back. You'll see in today's examples that there are some losses, but then you'll see how quickly they were made back sometimes on the very next setup. So it's all about being consistent. All right, let's go into a little bit more detail about strategy number 9. We talked about the process of being a pullback strategy. How it does this is that it employs two simple indicators, extremely simple, that probably many of you are using today, but not in this fashion, because it depends on their relationship to the price, and that's what automatically produces and generates the signals. Now, if you're not familiar with what a pullback trade is, in an overall uptrend, okay, when you discern that the market basically overall is going up, we don't mean the last 10 bars, but overall it's going up, and we show you how to do this. Well, the buy signals will be generated during a decline. Excuse me. So a lot of traders who aren't familiar with pullback think that you're buying low and selling high, and it sometimes appears this way on face value, but it's not. What you're doing is you're buying at a decline, but in an overall uptrend, okay? That's different from buying in a decline in an overall downtrend. For example, this market that we've seen the last couple of months here, when it was going straight down in December, that's not a pullback method because the overall trend had now changed to the downside. And if you were trying to buy then, you saw how that didn't work. So what we would have been doing during that time would have been selling in an overall downtrend. So in an overall downtrend, we're looking for signals to be generated during a rally or during a bounce. Let me share with you what this looks like in a simple example here. This is a pullback buy example. So what you want to look for is the overall uptrend, as we see here with this green up arrow. So the overall trend is going up. But as it goes up, we know that not everything goes up forever. And you get into this kind of a bracket phase where you go up and you bounce around a little bit. And then usually, if the trend is strong enough, it continues on its upward course. Well, what pullback traders like to do is to buy in that bracket once it sells off. So this area would be where you'd want to purchase, somewhere around here. Now you need certain requirements and parameters to tell you when to purchase, and that's what strategy number 9 does. Now let's say the overall trend is down, as we see in this example here. The red arrow is going down. The market is going lower, but once again, nothing goes straight down. We start to get in this little bracket area where we bounce up and down again. And then once the trend is strong enough, it will resume its course to the downside. Well, pullback traders that like to sell like to look for price when it bounces to go short. That's where they like to sell, either by buying the puts or some type of spread strategy that will benefit you if it goes lower. So this is the difference between selling in an up market while the market is going straight up, or buying in a down market while the market is going straight down. We're not trying to do that. We're not trying to pick tops and bottoms. What we're trying to do, as we look back, let's just backtrack here. If the overall trend is up, we're looking to buy on a little sell-off right here, okay? If the overall trend is down, we're looking to sell on a bounce. That is the difference between simple buying tops and bottoms. This is a pullback method. Okay, so let's look at some down market examples. Now, I'm sorry, one of the reasons why it's been so difficult for me to give a Strategy 9 presentation is because of its simplicity. This is the simplest, and I mean simple, I mean it only has 2 rules. This is the simplest strategy I have ever traded and seen signals with consistency generated on. So I can only share one rule with you, and that's by applying the 50-period moving average. I can't share with you what the other indicator is, and that's how signals will be generated. So you would have it all figured out by that if you had any type of experience in trading the markets. So I'm sorry, many times I'll go into, such as an example, strategy number 4. I'll give you 2, sometimes even 3 of the 5 rules in that particular method. But if I gave you more than 1, well, you would have this entire method figured out. That wouldn't be fair to the people who've already started to purchase our strategy number pre-launch, strategy number 9 phase. So let's just share with you an example here in COST, Costco. This was last month, about a month ago in December. Once we look at this chart, we'd say, well, how can you tell what this thing is doing? There's really no direction. Well, that's true. One of the things that helps us is by applying the 50-period moving average, okay? Now, this is what we call our buy-sell line. If price is above, we're a buyer. If price is below, we're a seller. Now, I know someone looking at this will say, well, Steve, price is above and below. What do I do here? Well, that's the simplicity of this particular method, because the last 3 or 4 bars actually closed below. This closed just barely below it, and just in that small space, along with another tool, it actually generated a sell signal. Now, had you taken that signal, you would have been in it, and the next day you would have said, well, nothing much happening here. I don't know. I became a member of this pre-launch of the strategy number 9 course and nothing much is really happening. I've got the puts, and then look what happened in the following weeks. The stock fell out of bed 37 points, so you had 37 points to work with. Now remember, we're not going to tell you to exit with a 35-point gain. We're not going to tell you that this is your exit. We give you a number of variables for entries, for exits, for stop placement. It's up to you to decide. Remember, we're not here to tell you how to trade. That's going entirely against our philosophy. If I told you where to enter and exit and place your stop on every trade, well, how different would that be from a system where you just blindly enter orders without understanding why? We want you to understand why you're entering an order, all the different variables for entering an order, all the different variables for exiting and stop placement. And then you make the decision, because you can only be consistent if you feel comfortable with where these orders are. And the only way to feel comfortable is by you deciding on your own. Here's another example on Facebook. We all know that Facebook last year was going up, and then terrible news came out, and then the stock's been going down as of late. Well, we see here that it's easy to see we've been in an overall downtrend. Okay, very simple to see. And if we apply the 50-period moving average, well, we know we've been in an overall downtrend for a long period of time, because look how low we are below the 50-period moving average. Now, once we know that the philosophy of a pullback trade is we look to sell in an overall downtrend. But are we just going to blindly sell at the market? No. A pullback trade is one where we look for a bounce. Now, the trouble with pullback trades, where a lot of people don't like them, is because they never know how high the bounce will go. They don't know if it's going to end or go higher, or if it's the beginning of a new uptrend. That's the beauty of strategy number 9. Although it doesn't produce 100% winning signals all the time, it has a high level of consistency. As we see here, every time we bounced, strategy number 9 generated a signal. It will not generate a signal while the market's going down. It looks for those bounces all along the way. Wouldn't you have liked to take advantage of all these bounces, which were all valid strategy number 9 signals? Now pay attention to this particular setup. Let's say you took this signal here. If you were quick, you could have made a quick profit, but let's say you wanted to hold out and thought it was going to make lower lows the way it did a couple of weeks later. Well, perhaps if you had taken a very tight stop, you would have been stopped out. This is where students get frustrated and disappointed. They say, this stuff doesn't work. The first time I tried it, it doesn't work at all. This is why you have to get back on your horse, and this is what we talk about consistency. Just because you fall off, it doesn't mean it's not going to work. You have to get back on, because another signal was generated here. Had you taken that next signal, you would have made back everything you lost and potentially captured more. Now, had you taken this very first setup right here, well, you potentially could have captured 58 points to the downside in just about 3 or 4 months. Another example, NOC. Once again, this is where students have a big trouble with trading, stocks, and it doesn't matter what market or what time frame. They'll look at something and say, well, Steve, I've always been taught you have to look at the earnings. Okay, now the earnings are coming out on this, and they're supposed to be really good. And I think that's why the stock is going up, because as you can see here, we were kind of going lower. And look at the bottom we made. Kind of a reversal. We closed on the top. And now it's been going on for 3 days. I'm going to jump in and buy this thing, okay? It just looks too good. And plus, the chat room I go to, they really love this stock. They think it can double its value. And if the earnings are good the way they're being estimated, this thing's poised to take off, all right? Now, listen to all the justifications I made for trading this. They were all based on someone or something else telling me what the stock is going to do. Some, earning report, someone in a chat room, some trading guru, but they weren't based off what the chart in front of me was telling me. This is how we're trained as traders. We're never taught to listen and focus on what is in front of us. We're always taught to focus and listen on some guy who's on TV. After all, he must know what he's talking about, right? Or we're taught to listen to the institutions. After all, they're the smart guys with the big money. They must know what they're doing. Or support and resistance, right? Or volume. Or some guy in a webinar I went to on Wednesday. He must know what he's doing, right? Trust me, I'm not here to tell you what to buy or sell, when to buy or sell. I'm here to teach you what the market is saying. That's all I'm doing. And what was the market saying? Well, the first thing to find out what the market wants to do is to apply the 50-period moving average. So ask yourself, was price above the 50 or was it below the 50? It's below the 50. And what's our rule? If price is below the 50, we're only going to be a seller. We're not going to buy anything. So I don't care what the estimates are for the earnings. I don't care what some institutions are doing. I don't care what the support resistance is. It doesn't make any difference. There's no consistency in that. What is the market telling us? It's telling us that it wants to go lower, and until it has consecutive closes above the 50, this is most likely just a bounce in an overall downtrend. So if this is a bounce, we want to be looking to sell as a pullback. And guess what? Strategy number 9 generated a sell order right here, and NOC dropped 42 points, and you could have potentially captured 42 points within the following couple of weeks. So what happened to the earnings? What happened to the institutions? What happened to support resistance? It all goes out the window. See, that stuff all works until it doesn't. Once again, I keep hating to remind you, but I was trading this stuff 42 years ago. And it didn't work for me. I thought I was going to be out of the business my first year because nothing was working in terms of consistency. It wasn't until my mentors taught me to let go of all that, and that's when my trading started to become consistent. All right, so we look back at that S&P 500 chart. Once again, as the market was going up, it was above the 50-period moving average. So that didn't really take that much information for you to figure out, because right here you could have figured out that, well, the market wants to go down now, well before it fell thousands of points to the downside. And while it was going up on these sell-offs, one right here and another one right here, strategy number 9 generated a buy signal. Now that price is below the 50, what's the overall trend? It's down. The market's telling us it wants to go lower. We knew well in advance, my students who know this simple principle knew well in advance in October that the market wanted to go lower. It doesn't predict how low, but it just knows that you shouldn't be a buyer at all. So we knew 2 months ago that we shouldn't have been a buyer, 3 months ago. Now all we have to do is wait for the little bounces, such as a bounce right here, and then another one right here. And you could have taken advantage of this, okay? This is how easy it is to trade once you're in sync, and then you can apply strategy number 9. Let's look at some upmarket examples, because I just don't want you to think that the market, this generates sell signals. It generates buys and sells, all time frames, all markets. Now, there were not as many buy setups because the market has been going down for the past 3 months, but in November, someone would have said, well, Steve, this has had a really nice run. It's starting to roll over. Look at this doji right here. This is a sign. I take a candlestick course. I spent about $10,000 on this candlestick course, and this always tells me when you see a doji at the top, that's like a hanging man, that is a reversal pattern. So this is where you want to get out. So we should be shorting this market because most likely it's going to be going all the way back down, okay? This is once again the way I was trained some 42 years ago when I first started learning how to use candlesticks. But guess what? There's no consistency in trading them that way. What is the market telling us? Why don't we just listen to the market? Well, price is above the 50. So we don't want to sell anything. We don't care if it goes down a little bit. We're going to look at that as an opportunity to buy. We're not going to look at that as a top. We're going to look at a sell-off as an opportunity to buy on a pullback at a lower price. So strategy number 9 actually generated a buy signal right here. And the stock went up 5 more points in the following month. As we see Yelp, once again, someone looking at this would say, well, gosh, okay, I don't really have any idea. The market's not telling me anything, kind of just in a holding pattern, in a range. And my mentor in my course I took always tells me to stay out of this because it's in a range. Well, it's not in a range. The overall trend is up. So it wants to go higher. We just don't know how high. We just know that we should be looking at this from a buyer's bias. That's all. It's that simple. And once you know how to do that, well, you could purchase options, calls, or whatever you want to do, buy the stop, because a buy setup was generated right here. You could have taken advantage of this quick bounce or waited, purchased another one, and taken advantage of a quick 8 potential points you could have captured, okay? The market is always telling you what it wants to do. The trouble is we never listen to the market. We're always listening to some guy in the chat room. We're always listening to some guys on TV, the pundits telling us every night what they like or don't like about the market. Or we're always listening to the institution, support and resistance. Once again, why do 85% of all traders fail? Because 85% of all traders listen to these things the way I did some 42 years ago, and they really don't work. Here's another example in Apple. Now, this is an older chart. I'm going to be sharing with you in a few minutes a more recent chart of Apple, but this was going back to September, coming into October. Once again, someone looking at this will say, well, Steve, no clear-cut direction, kind of in a range. Actually, we're in a clear-cut direction. The overall trend is up, so we want to be a buyer. And There was a buy signal generated right here in the middle to end of September. Stock went up 15 points in 2 weeks. All right, a nice quick trade using this extremely simple pullback method. Now let's look at some different time frames, okay? Because I know a lot of you don't particularly just trade, daily bars. Let's look at a weekly bar in Netflix. Once again, this is going back all the way to April 2017, almost 2 years ago. Now at this point, sure, Netflix was going higher, but it was just kind of steadily going higher, kind of a nice stair-step approach, but it really wasn't taking off. So there really wasn't any idea as to how high it was going to go. And we really didn't even have an idea as to how long this short rally would last. Maybe it would just kind of roll over and die. But the stock market took off. So did Netflix coming into June and the summer of 2018. So is there a way we could have taken advantage of this prior to this tremendous upward move? Well, sure. First thing we do is apply the 50. Now, the 50 period moving average told us back to April 2017, almost 2 years ago, that you should only be buying this. Don't worry about selling it. Don't worry about this rolling over until you had consecutive closes below the 50. Until that happens, you're only looking for buy setups. And guess what? On a weekly time frame, strategy number 9 generated a buy signal in July of 2017. And if you missed that one, gave you another buy signal in December of 2017, over a year ago. Now, if you had taken the very first setup, you could have potentially captured 270 points. Now, remember, we're not saying you would have made 270 points, but that's entirely up to you. You could have potentially captured that depending on which exit or how you wanted to trade your particular setup. Remember, you're in charge, not us. If I was telling you what to do and sell, I would guarantee you would lose money because two traders never trade alike. Everyone has different parameters for risk. Everyone has a different way in which to hold on to positions. Some people like to get in and out quickly. Others like to hold on as long as possible. There's no one right or wrong way. What's wrong is when you're trading according to someone else's parameters, like going to a chat room or listening to what someone says on TV. That's what's wrong. You have to make your own decision. Once you feel comfortable on how you trade, that's how you become a consistent trader. Here's another example in Snap. And as you can see, this stock was the darling of the IPOs a few years ago when it came public, I believe about, I guess it was in February, maybe it was 2017. But the stock came public roughly around the high 20s or low 30s, I believe. And it never took off. Everyone thought it was going to be the next IPO that was going to make millions, and it never did. Let's say you had invested in that, and you're wondering, boy, when am I going to get out of this thing? I can't make any money. You're just looking for a way to get out to retrieve some of your losses, but the stock just keeps going lower and lower. Well, first thing you do is apply the 50-period moving average, okay? As you can see, at this point, in April of 2018, last year, we had consecutive closes below. So now we know that you shouldn't even be long this. So as we made new lows, all of a sudden we had a bounce. Well, strategy number 9 generated a sell signal. Had you taken that sell signal just as a point to get out of your shares, well, you could have saved yourself 8 potential losing points or losses to the downside by getting out. So many times this can help you get out of a position. All right, this is another weekly chart, and you could have saved yourself potentially 8 points more to the downside. In fact, I feel it's even lower now. There's been more negative news. The funny thing is, though, is that I believe there's negative news that came out this last week. Don't ask me because I don't look at news. That's one of the first things my mentors taught me to forget. I used to look at news on a daily basis. I kept the news on. I was in charge of making markets on the stock exchange floor of about 50 or 60 stocks. So I had to know everything about those companies, all the earnings reports, the CEOs, all what the companies were doing. So I was looking at news here and there. One of the first things my mentors taught me was, Steve, there's absolutely no reason to look at news. I mean, you're not involved in intraday workings of the company. You should just focus on what the price is telling you. And I didn't want to believe them. I said, that's ridiculous. And then it wasn't until I finally absorbed their concept and I said, yeah, you're right. There's really no need to look at it. So I haven't looked at news in over 4 decades now. So the only thing I look at is what the price is telling me in relation to the 50-period moving average. So once we went below this 50, you knew not to be in the stock. The market was telling you, not some news event, but the market was telling you right here at 13 and 14 to get out. I heard some news came out this past week, which probably has us well lower than where it is right now at 4.5. So, having said that, it doesn't matter. The market is still telling you that you shouldn't be purchasing this. Let's look at a monthly chart of DVN. Once again, someone looking at this would say, Steve, this isn't a range. We go higher, we go lower, we go back up, back down. How can you trade this? It's as simple as adding the 50-period moving average. Then we ask ourselves, where is price in relation to the 50? Even on a monthly chart, you can use the same concept. Take 50 bars of the last monthly bars and 50 periods and construct your moving average. That will tell you if you should be a buyer or a seller. So where someone would say, well, it's kind of in a range. I'm waiting for it to break out. You don't have to wait that long. All you have to do is apply the 50. And every time we bounced, strategy number 9 generated a signal. Okay, you could have taken a quick 15 points to the downside in about 6 months. Then we bounce again. And in 1 month, you could have potentially captured 10 points. We bounce again. And in about 5-6 months, another 20 points potentially that could have been captured. Let's look at a 5-minute chart of the spiders. I know there's a lot of stock traders that like to trade intraday. Okay, let's say you've been trading the spiders. Okay, this was going back, I believe, last week or two. The market has been going straight up. It looks like it's rolling over. Let's say you like to look at double tops. Maybe you like to look at divergence. And you say, well, Steve, I took this $10,000 course on divergence, and this is also hitting major resistance. The institutions are selling, and the software I bought says that this is a major sell because this top was not confirmed, and I looked at the volume and it's not confirming it either. So I'm going to be a seller here. It's probably going to come all the way down here. Once again, you see my justifications are all made off what someone or something else is telling me. How about the market? What's the market telling you on this 5-minute time frame? Well, the only way to find out is to apply the 50-period moving average. And where is price in relation to that? It's above. So the market is telling you that until it has consecutive closes, 2 to 5 closes below, it's going to go higher. It wants to go higher. So you should not be looking for any sell setups. You should be looking for buy setups. And since we're selling off right here, this is an opportunity for a pullback buy, a buy at a lower price in an overall uptrend. And guess what? Strategy number 9 generated a buy signal on a 5-minute chart of the spiders. Look what happened. Stock went up 8 points by the end of the day, and that represented hundreds of points in the Dow. Let's look at other markets, because I know some of you may still be saying, Steve, I don't trade stocks. I don't even trade intraday stocks. Okay, that's fine. Let me show you how easily Strategy 9 can transfer onto other markets. Here's a 4-hour chart of the euro-yen. Okay, this was going back just about 3 weeks ago. Once again, someone looking at this would say, Steve, no clear-cut answer on this. This is a 4-hour chart, but I don't have any idea what it's doing. Yes, you do. The overall trend is down. So you know that until we close above, that the euro-yen wants to go lower on a 4-hour time frame. There's no need to look at a higher time frame. There's no need to look at another currency pair. You can if you want to, but there's absolutely no need. Why overcomplicate things? The only thing you need to focus on is the one chart in front of you. I only have one screen in front of me. I only trade one chart at a time. I'm not looking at multiple time frames. I'm not looking at different markets and different volume indicators and listening to news. I have one screen in front of me, and most of the time I'm listening to music in the back. So there's no real reason for me to overcomplicate things. So what I can tell from this right now is the euro-yen is telling me it wants to go lower. And what do we have here? We have a bounce in an overall downtrend. So if we apply the strategy number 9 rules, we see that a sell signal was generated right here. So you have the option to sell there, and not much happened in the next couple of days. In fact, we went lower, but now we started to go right back up. Had you taken a quick exit, well, you could have made maybe about 50 pips if you wanted to, but let's say you decided to stay in for the long haul. Well, that would have been a good idea because another sell signal was generated a few days later, the first week in January, and then look what eventually happened. 825 pips to the downside that you could have potentially captured. That's over $8,000 per contract. Did we know it was going to go down that quickly and that low? Absolutely not. All we know is that the market was telling us it wants to go lower. So it's up to us to follow it according to how we want to trade it. If we wanted to get in and out with a quick 10 pips, that's fine. We wanted to take 100 pips, that's fine. There's no wrong way to trade if you're following your own decisions. And then let's look at commodities. I know a lot of traders are now starting to trade commodities with the market, the volatility, and they don't feel like they have something that's tangible. They want to trade something that feels a little bit more valid. Okay, let's look at a weekly chart here of coffee. On our platform now, we have markets and data virtually covering all the different exchanges, commodities, Forex, Toronto Exchange, China, Europe. It makes no difference, even the Indian markets. Well, we're covering a weekly chart of coffee right here. How can we figure out what we want to do? Well, we are below the 50 period moving average. So even though we've had a really nice bounce here, I know some of my students would say, well, Steve, gosh, this was a great buy setup down here. This was a morning star, and I could have purchased it. And look at this. It really took off. Sure. I'm not telling you that doesn't happen every once in a while. The same way I'm not telling you that if you go to a slot machine every once in a while, you may hit a jackpot. But what I am telling you is that you trade that way over time, you won't have anything to show for it because it's designed, just like the slot machines, to have you stay there so that you'll give your money back. It's the same way we're trying to trade those traditional ways. There's no consistency. We're not looking to hit home runs. We're looking to hit consistent trading. So the point is not to look and say, gosh, I missed that bottom in coffee on a weekly time frame. The point is to look for the next setup. Now, trading strategy number 9, there is a sell signal right here, okay? And look what happened. We went all the way back down to where you would have purchased it, almost 18 points to the downside, okay? So what we're talking about is that had you never gotten out, most likely you would have given back everything you made on that trade and perhaps lost more. Whereas if you had consistency, you only would have looked for the high probability setup was to go short because price was below the 50 period moving average. This is a weekly chart of coffee coming into the middle of December. Now, let's look at a 30-minute chart of the E-mini futures, okay? This is going back, I believe, to January 7th, okay, last week. Where is price in relation to the 50-period moving average? It's above, right? So are we going to be a seller of the E-mini on a 30-minute time frame? Nope, not until it has consecutive closes below. Now, since we're looking to buy, as price is descending, this is a perfect setup for strategy number 9. And there was a buy signal right here. Now, depending on where you place your stop, you could still be in the trade. If you had a real tight stop, you may have been stopped out. But let's say you didn't give yourself that tight of a stop on an intraday chart. Well, 65 points to the upside in 3 days, okay? That's over $3,000 per contract if you had decided to stay in. Potentially you could have captured. But remember, it's up to you. We're not telling you where to exit. You could have made 1 point, 5 points, tried to go for 60 or 70 points. Entirely up to you. Okay, so let's review now. Now that I've showed you all these examples in different markets and time frames, remember, it's a brand new strategy. I've been paper trading it for roughly about 6 months now and been trading it on my own intraday on the E-mini futures. It's designed to trade pullbacks with 2 simple indicators. It also has 2 simple rules, which are these 2 simple tools that we're going to be sharing with you. As you just saw, it can be applied to any market, any time frame, and any direction. You can also apply to option trading. So once again, if you would like to use a lot of our students around the world are option traders. And they say, well, Steve, you know, how do I trade options? You just take them off the setup. So in other words, if it was a setup to go long, once that requirement is met, instead of actually purchasing the stock, you just buy a call or some type of spread strategy to the with an upward bias. That's it. And just continue to follow the rules. Wherever you wanted to exit, well, then you would exit your option plan. Now, remember, learn the strategy first. Please paper trade. This is extremely simple, but I can almost guarantee you, as soon as this goes live, very soon in a couple of weeks, there are going to be students who lose money consecutively saying, this doesn't work, Steve, I don't understand. And then when they show me their work, I'll see that everything's wrong, and I have to say to them, listen, you're implementing the rules incorrectly. Even with an extremely simple format like this, traders will still implement it incorrectly. So we always want our students, require them to paper trade until they fully understand the process. Our edge is consistency. So that means that we will have losses from time to time. It's perfectly okay. Don't worry about it. A consistent method is able to recoup those losses. Now, you owe it to yourself to start out 2019 in the right direction. We're already almost 3 weeks into the new year, all right? If you're still struggling, you owe it to yourself to really start out in the right direction. Here is a great, great offer, a great discount today for all the attendees so that you can get going in the right direction in 2019. We're not only going to offer you the strategy number 9 course, we're going to throw in the PTS Primo charting platform, okay? You're going to get detailed video course instruction. We're going to teach you all the entries, all the different exits and stop placement so that you can decide how you want to trade it. The entire course rules. But this also comes with 1 year of the PTS Primo charting platform. All the examples I shared with you today were all generated on the platform. That's an over $1,700 value. Now this also includes a scanner, so you can scan for nightly signals in all these different markets, the Indian markets, the different indices, commodities, Forex markets, futures. So it doesn't matter which markets you like to trade and which time frame. This is our super New Year special to get you on the right track in 2019. Now, this will normally cost you, if you just purchased it, which will probably in the next following months after we go live, will normally cost about $47.35. Don't worry, we're not even going to dare dream of thinking of charging that much. In fact, we're going to really slice the price. We're going to discount it by nearly 60%. You're going to save over $2,700, and the price is going to be $19.95 for 1 year of the platform, along with our new strategy number 9. But on top of that, we're also going to give you another bonus. We're going to have payment plans. So if you can't come up with $19.95, don't worry. You can have a small deposit and still establish a payment plan with Pro Trader Strategies and still be up and running and be one of the first to take this course. Now, if you're still on the sidelines, I want you to look at this. Yahoo Finance reported just last week or a week or so ago, Apple loses $50 billion in market value after warning of rare revenue miss, okay? Shares of the iPhone maker plunged nearly 8% in extended trading Wednesday, knocking some $50 billion off the market cap after the company took the unusual step of cutting its revenue guidance. Okay, so terrible, terrible fundamental news. For those of you who like to trade fundamental news, if you were long Apple, this would have been a terrible thing to happen, okay? Let's see how strategy number 9, just 2 weeks ago, could have helped you make this trade well in advance, all right? Let's look at just 2 or 3 days prior to that news, all right? Someone looking at this would say, well, I don't really see anything really happening here, but on the 31st of December, just a few weeks ago, strategy number 9 generated a sell signal. Now, you could have scanned for this using your platform, and it would have shown you that there was an actual sell signal that was generated. You could have decided for yourself on the night of the 31st to take that trade, or you could have shorted the stock, or let's say you were long the stock. You said, well, you know what? I'm going to take this sell signal as a reminder to get out because most likely it's going to go lower. And we're below the 50 period, even though you can't see it. The 50 period was much out of the realm of this chart. So this is a valid rally here in an overall downtrend. This is a classic pullback trade before the news came out. And 2 days later, the stock dropped 16 points with that news, okay? Now, someone would look at you and say, gosh, you're a genius. So you must have done your homework and researched that news and knew that there were going to be terrible news about the revenue in Apple. And you would have said, nope. Because I followed 2 simple rules that the market was telling me it wanted to go lower. And that's all I did. I sold the stock. All right. That's how simple trading can be. And if we had had this pre-launch about 2 or 3 months ago, you would have been able to take advantage of that. So these are actual signals that are being generated all the time. Remember, 2018 is over. It's gone. A year from today, you will have wished you became a member of this course. You don't want to be where you are right now a year from today. You want to be well in advance and have your goals met and have your dreams met and be on the road in that direction. Now, we can't promise that, but we really feel strongly that we can put you in the right direction of your goals. That's what strategy number 9 was designed for. So for more information, become a member of this pre-launch of our brand new strategy to trade it right alongside with me, contact Pro Trader Strategies, okay? You can either email them. I would suggest calling them directly if you want to set up a payment plan. That way they can structure a payment plan for a small discount. You can be up and running and you can be trading this ASAP. All right, call them directly at area code 310-598-6677. Now that link you see at the very bottom will take you to the sign up page and give you more information regarding this great opportunity. It's not a live link, but a live link has been posted in the chat box on the far right. So if you want to click on that, you don't have to copy and paste the link below. You can just simply click on the link in the chat box, okay? So as promised, I will take all your questions right now. If you have any questions, please feel free to go into your question and answer box, and I'll answer them at this point. Remember, we've slashed the price by 60%. You're going to be saving over $2,700. After the pre-launch is over, we'll most likely go up to that $4,700, $4,800 cost. So you really want to take advantage of this $1,995. In addition to that, you're getting 1 year of our platform. There are so many other things available on the platform. We have a portfolio manager. We have different tools for measuring the strength of the trend. We have the scanner, which in my belief is worth its weight in gold. You can scan many time frames, different markets, indices, Forex markets, currency pairs, and you can scan on a nightly basis for the setups. We have directional tools on there as well, short-term directional tools for finding out what the short-term direction is. Lots and lots of different things, okay? Question, people are saying, when will this come live? Well, this is something probably would be better to ask Pro Trader Strategies. I'm assuming within the next 2 to 3 weeks, but I would contact them to make sure. We're trying to get the pre-launch phase with all the students. We've had a number of students. We only gave this presentation once before, and this is the last time we're going to give this pre-launch presentation before we actually start the real sales of strategy number 9. So if you want to get on the ground floor, if you want to be trading this with me, this is where you want to begin at this extremely low discount. You're going to be saving over $2,700. That's going to be wiped out completely. You get 1 year of our platform that I designed with Pro Trader Strategies. All the examples you saw today, people are asking, were the examples all from the platform? Yes, they were. Everything was generated on our platform. And we make it simple so that it's just one click away. You don't have to be looking all over the place and upload things and make sure that it's the right time frame or the right market. It's just so simple to navigate, okay? Okay, question, yes, you will get my, people are asking about the educational correspondence. You will get my private email, and anytime you have a question concerning the trading or the teaching of strategy number 9, you can email me ASAP, and whenever you like, on the weekend, in the middle of the night. I get up very early so I can answer a lot of the emails, and I'll get back to you as soon as I can, okay? So that's another way. You will have ongoing educational correspondence with myself. So that's another thing. It's not something where we just send you out the information and say, good luck with it, you're on your own. You'll get educational correspondence with someone who's been trading this himself, okay? Okay, once again, as we close up, please take advantage of this. Oh, sorry, another question. Will strategy number 9 work with NinjaTrader? Yes, I believe they are making an add-on for that as well. So we will have add-ons for, I believe, Metastock, TradeStation, NinjaTrader. But trust me, it is so simple to use on our platform. You're going to be getting our platform anyway. So I would venture to say that even if you get the add-on for NinjaTrader, you'll want to use it and you'll be much more happier and pleased using it on our platform. It's just so simple. It's so easy, and it's all pre-canned, it's pre-loaded, it's pre-formatted. Okay? But yes, James, it most likely will be there. Any questions about tech support or data, do not hesitate to contact Pro Trader Strategies. They're in charge of all that. I'm in charge of all the teaching and trading. So if there's anything about platforms or about data or pricing, you want to get in on a nice small deposit for a payment plan, contact them and they will be happy to talk to you. There's no obligation. They have trading consultants manning the phones right now. They'd be more than happy to answer any question without any obligation, okay? But you must act quickly in order to take advantage of this deep, deep discount, over $2,700 you'd save. I mean, you just saw that example in Apple. I'm not saying how much money you would have made because everyone trades differently, but that was a trade that happened just a week or so ago, okay? Okay, as we get ready to close up here, I want to say thank you so much. Please, there's no obligation. Any questions after the presentation has concluded, you can email. I would suggest calling Pro Trader Strategies. They would be more than happy to answer any other questions with no obligation at all and get you started at the ground level with trading strategy number 9, okay? In conclusion, I want to say thank you so much. If you're really looking on turning your trading around and getting it moving in the right direction for 2019, this is a great method to point you in the right direction, all right? I wish you the best of luck. Thank you so much for attending today, and I look forward to all of you becoming students and members of mine in the new Strategy Number 9 course. Thank you so much. I'll see you next time. Bye-bye.